Welcome to BigONE Weekly News Update. I'm Mia. The crypto market remained relatively stable last week, continuing its volatile but resilient trend. Bitcoin, BTC, spiked to $110,000 on Monday before retreating to close the week at around $105,600, virtually unchanged with a minor 0.1% dip. Ethereum, ETH, posted a 1.7% gain to $2,550, while Solana, SOL, inched up 0.24% to $152. DeFi boosted by regulatory optimism. DeFi tokens saw gains after U.S. SEC Chairman Atkins made unexpectedly constructive remarks on decentralized finance, self-custody, and self-executing code during a crypto roundtable last Monday. These friendly signals helped lift sentiment across the altcoin sector, especially for DeFi-related assets. Middle East tensions stir traditional markets. Geopolitical risk re-entered global markets as conflict erupted between Israel and Iran. This pushed oil prices up over 10%, sent gold to a record high with a 2% surge, and dragged down U.S. equities. Despite the market reaction, analysts suggest this flare-up is likely short-lived and won't significantly alter longer-term trends. U.S. Treasury yields and the dollar index bounced back from early declines. The 10-year yield, after dipping to a weekly low, jumped more than 10 basis points in response to the uncertainty. Corporate crypto holdings gain traction. Public companies continue accumulating crypto assets. Around 228 listed firms globally now hold 820,000 BTC, with a growing number experimenting with leverage strategies first pioneered by Strategy, formerly MicroStrategy. Notably, 20 of these firms, plus 8 others holding ETH, SOL, or XRP, are using debt financing for their acquisitions. This build-up has accelerated due to changes in U.S. accounting rules. Since December 2024, companies can now report crypto at fair market value rather than only recognizing impairments, making it more attractive to hold digital assets on the balance sheet. Most of the related debt won't mature until late 2029, reducing short-term liquidity risk and allowing for continued accumulation into the second half of 2025. Regulatory landscape shifts. Legislation is moving swiftly in Washington. The STABLE Act in the House and the GENIUS Act in the Senate are both progressing, aiming to establish reserve standards, AML requirements, and protections for stablecoin users. The GENIUS Act could pass the Senate as early as next week, potentially leading to a unified bill by the August 4th congressional recess. Meanwhile, the broader Clarity Act, introduced in May, seeks to define the regulatory boundaries between the SEC and CFTC for digital assets. It builds on last year's FIT21 Act, but proposes joint definitions of key terms like digital commodity, which could allow for ongoing evolution in the regulatory framework. ETF pipeline faces crucial decisions. The SEC is evaluating around 80 pending crypto ETF applications this year, with decisions expected across several categories. Multi-asset index funds. Firms like Bitwise and Grayscale aim to launch diversified ETFs, many of which are heavily weighted in BTC and ETH. Decisions may come by July 2nd. In-kind redemption mechanisms. These could tighten spreads and align ETFs more closely with NAV. Reviews may extend to October. Staking-inclusive ETFs. The SEC is hesitant, but may be compelled to act earlier based on Rule 6c11 standards. Single altcoin ETFs. Final deadlines fall in October and full review periods are expected. Eyes on the Federal. The Federal Reserve is scheduled to hold its June FOMC meeting this week. Despite pressure from President Trump to cut rates, markets anticipate no change. The Fed views current challenges as tariff-driven rather than monetary, and fears triggering long-term inflation if cuts are made prematurely. The week ahead, June 16th to 20th. Crypto events. Arbitrum Unlock. 92.65 million ARB tokens. Conclusion. While geopolitical tensions and regulatory uncertainties swirl, the crypto market is showing increasing maturity. From accounting rule changes to legislative momentum and ETF advances, digital assets are moving closer to full institutional integration. As the summer unfolds, crypto summer may be more than a seasonal phrase. It may mark the beginning of a new phase of structural legitimacy. Join BigONE today and take advantage of the growing cryptocurrency market.